despite the rocky markets that started the year, they are increasingly optimistic over the state of their personal financial outlook for 2023. That's according to a new survey from Betterment, an online robo-investment platform. Joining us now is Sarah Levy, the CEO of Betterment. Sarah, great to have you back on the show. Break down the results of this survey for me, because we have seen a fast and furious shift in sentiment in this market right now, and I really want to know how retail investors are participating in that.
Great. So thanks again for having me. So we surveyed 1,200 investors who had both 401ks and some other investing across generations, which I think was pretty interesting to sort of tease out the difference. And overwhelmingly, I think we were really excited, number one, to see incredible optimism, with more than 60% of respondents saying they're optimistic about the financial future into 23. But we also learned that there are some differences by generation that we think are pretty interesting, with everybody focused on the long term, which I think is also exciting for us as we think about retirement and long-term savings as really the goals that we put forward to our customers.
Yeah, one of the things you've come on the show and talked a little bit about is your cash product and how successful it's been. And as we have focused week after week on bank deposit data and this deposit flight to higher yielding products, how is that performing?
So cash is a huge story, I think, both in the survey and in terms of flows, right? In the survey, what we heard is 8 out of 10 customers, including more so even with millennials, are saying they are increasing their cash balances and seeing that as really the anchor of an investing strategy. And we're absolutely seeing that. So we had record high inflows in first quarter, and in second quarter, we're on pace to match those record high inflows, with May as possibly our best new customer number yet as it relates to folks adopting our product.
Sarah, is this technology, and I don't just mean Betterment, I mean things like mobile that make it easier to move cash into the market, is it helping retail investors beat our bad habits? Are we seeing, in a way that perhaps we didn't before, when the market's down like it was at the end of last year, people actually putting money in as opposed to pulling money out? And are people maybe less chasing rallies than they were before, or no?
Well, I think you've got a cash story and you've got an investing story. So I would say sort of yes all around. The cash story, I think mobile and digital definitely is accelerating people's interest in, putting cash away and saving. But I think that is really about rate, right? And that question, there's safety, which they're looking for, and they're looking for rate, which is the big banks are frequently, giving pretty low rates. We're offering 4.5% as an example. There are a lot of other digital competitors offering kind of similar high rates, and so people are putting money there. If you think about investing, and if you're sort of making a comparison to like the days of the meme stocks, John, I think your assertion is exactly right, which is people are staying the course. And we're seeing in particular with long-term investing. So in particular with retirement, people are staying the course.
Why are they staying the course? Are you able to see from the mechanics, from the software, what it is that's helping people to make smarter decisions? Is it trust in the robo part of the robo-advisor? Is it explanations about why the market might be doing what it is?
Look, our customer and those who have been attracted to us has always believed in set a plan, stay the course. And that's, from the beginning, what we've preached. One of the great things about this survey that we just fielded is that what we heard back from, and these weren't just our customers, these were retail investors generally, is that they're coming around to this idea that the long term is important, saving is important, saving for retirement specifically is important. And all of these themes, including diversification, are really the themes we've always preached. So I think from where we sit, we think our customers are just staying the course because they always had. I think the other thing that's happened to customers who perhaps weren't our customers is they got burned because it's not as easy when markets are volatile to beat the market. And so you got to be a professional. And I think the average investor is learning how hard that can be.